Shepard. I'm very pleased to be joined today by Mark Stewart for our Fundamental Series presentation on certifying public financial disclosure reports. Before I turn the presentation over to Mark, I'd like to cover a few announcements. Next month, we will be bringing you the Fundamental Series and Advanced Practitioner Series on the second and third Thursday as usual. We apologize for the technical difficulties we had a few weeks ago with this presentation. We were able to correct those, and I think we have a solution that will prevent that from happening in the future. But again, as we do these very frequently, we're bound to run into problems from time to time, and we thank you for your patience as we work through those. I'd also like to make you aware of something that you'll be seeing coming across the listserv in the next few hours. We'll be opening up registration for our spring ethics education series. We'll be having an event on May 5th and June 12th here in the DC area. So if you're interested in those, please look for those registrations and register as soon as possible because space is limited. Well, welcome, Mark. Thanks for joining us again on the Fundamental Series to discuss certifying public financial disclosure reports.
Thank you. Good to be here.
And we've been doing this together for quite a long time. You've been with OGE a little longer than I have, which is a bit more than a decade. And prior to that, you were an ethics official in the Coast Guard. Is that correct?
That's correct, Patrick.
Excellent. Well, shall we get into the exercises? Because I know we have a lot to cover today.
Absolutely, absolutely. First off, I'd like to say welcome to this refresher course on 278 review. It's sort of designed for ethics officials who have some experience with financial disclosure and have done it at least once before. So we're sort of assuming that you are all already familiar with the concept of a conflict of interest. We assume that you are familiar with the criminal conflict of interest statutes at 18 U.S.C. 201 through 209, the financial disclosure regulations at 5 CFR Part 2634, the standards of conduct regulations at 5 CFR Part 2635, and the exception regulations at 5 CFR Part 2640. If you are new to financial disclosure and are not familiar with those, I strongly recommend that you utilize OGE's website and other training materials so you can bring yourself up to speed on that.
And if I could just put a plug in for some of the materials we have available on the Institute for Ethics in Government YouTube page. Folks who are not familiar with the conflict of interest statutes or the standards of conduct may find some of the beginner sessions that we did as part of the virtual National Government Ethics Summit to be very helpful, and also the financial disclosure playlist has a lot of this same content.
That's great. That's great. Once again, let me introduce myself. I've been here at OGE for over 10 years. I'm a retired Coast Guard attorney, and I did ethics and financial disclosure as a collateral duty, and I'm sure that's true of a lot of other ethics officials out there. For my financial disclosure experience, the first time I was assigned to it, I was like, great, what is it? And I was a little shocked and amazed that we could ask people to tell us their financial holdings. But I did it, I learned it, and then I moved on. And then 1 year later, when I was assigned to it again, I was again shocked and amazed. But I did have the materials and the resources to refresh my own recollection and go through the process again.
I think that's always a challenge, Mark, is because we only do this once a year, and in some agencies you may only have a handful of filers. It's important to get back up to speed and kind of remember what kinds of issues you're looking for. So hopefully today will be helpful in that area.
Exactly, exactly. And you're not going to learn everything you need to know about conflicts of interest from this course, but hopefully this will refresh your recollection and you'll once again be reminded of the resources that are out there that you can use at your agency when you do financial disclosure. Typically, once we have the basics of the actual report down, the next issue is to ensure that we understand more complex financial instruments and how to report them. So that's what we're going to focus a little bit more on in this presentation. However, ultimately, the purpose of financial disclosure is to prevent conflicts of interest. That determination can be very complex and specific, and once again, is beyond the scope of this course. Once again, I recommend that if you're going to be dealing with this, that you make use of OGE's resources. Also, what I'd like to do now is make sure that you all have the handouts, and they should be a PowerPoint, if you printed it out, a copy of OGE's website page, helpful resources for public financial disclosure, a couple of handouts on the first exercise and the first exercise 278 form, and then the second 278 for James Nicklick.
So we should have two 278 forms and two sets of review material, or a set of materials for each of those, and those are what we're going to be working through today.
Yes, actually, the handouts only go for the first one. The second exercise is just the pure 278.
Just the 278, excellent. So we should have two 278s and some information for the first one.
Exactly
Excellent.
right, exactly right. And this course should take about 2 hours. We may or may not take a break in the middle, but once again, if you at your agency need to take a break, no problem. We'll just persevere here.
And this presentation, like all our presentations, is available as a recorded version as soon as we complete it.
Absolutely. What we're going to do here is go over a more basic annual report together, just to make sure we're all on the same page when it comes to the 278 form itself. Next, we will go over a more complex new entrant report, and our focus there is going to be on how we look up and track down certain more complex financial instruments. You will be able to call in and email in with questions, but basically I'm going to use Patrick as my new ethics official, and I will use him as sort of my guinea pig to ask questions about.
Looking forward to it, Mark.
Okay. The one thing I want to point out first is the helpful resources for public financial disclosure page on OGE's website. If you're not already familiar with it, please make sure that you put it on your list of favorites. If you go down that page and you look at for reviewers/ethics officials, the first bullet is public financial disclosure or reviewer's reference. That's a huge 400-page document. You can download it as a PDF so you can word search it. I just recommend that you make yourself familiar with that. The next bullet is Guide to Reporting Selected Financial Instruments, and this is a little bit of a heads up. We will be using that in the second exercise. So once again, if you're not familiar with that, I would recommend you download it and once again keep it on your list of favorites.
Absolutely. I find both of those resources to be extraordinarily helpful as I review public forms. We also have some previous distance learning broadcasts on more common, less common financial instruments from that Guide to Reporting Select Instruments.
Absolutely, and there's just a ton of advisory opinions on OGE's website on specific concepts or issues like mutual funds, et cetera, et cetera. Once again, it sounds like I'm beating a dead horse here, but this is just to make sure that you know that there are resources out there for you.
Should we get into the slide deck, Mark? Do you think that would be
Absolutely.
a good time
Why don't
to
we
do
go
that?
to our first slide?
Excellent. Okay, so we're going to bring up those slides for you here in just a second. And
Okay, so for our first slide, and this should be in your handouts, this is for our annual report and for our made-up agency profile. Our agency is the Electrical Utility Regulatory Agency. Our mission is to regulate the electrical utility industry in the United States. We have organic statute prohibitions. A lot of agencies have these. When they were created in their organic statute, there were certain prohibitions on what agency employees could hold. If your agency has that, you already know it. If your agency doesn't have that, don't worry about that now. Below that is our employee profile, and our employee is Chris Clear. We're doing an annual report. He's an SES, which is why he has to file a 278, and his duties are to oversee the license, inspection, and regulation of all nuclear power plants that generate electrical power in the United States. Next slide, please. Okay, the next slide is our agency's prohibited sources list. Some agencies have these, some agencies don't. Essentially, prohibited sources, the concept comes from the gift statute and the standards of conduct, and a prohibited source is an entity that either does business with our agency, wants to do business with our agency, is regulated by our agency, et cetera, et cetera. And so agencies will come up with lists of these entities and say that those agency employees can't have any holdings in those outside entities. These lists are not inclusive. They're just a guide. They're just a starting point. They can typically change year to year.
And we'd need to reach out to someone else in our organization to get this kind of information, right, Mark? So we might be talking to our contracting folks, or if we have a grants office and a grants-making organization, those are some folks who might be able to help us assemble such a list.
If we wanted to assemble such a list, then yes. A lot of times it's just mandated by the agency. I know from some prior experience that, for example, all DoD agencies have a huge prohibited sources list, and it's essentially any contractor with DoD. So we'll leave that up to you and your agency. We're going to use this for our training purposes today. Once again, if your agency has this list, you should be familiar with it. If not, it's still a good concept to know. You want to be able to know who's doing business with your agency and whether or not your employees have any connections with them.
Excellent. So it helps us to see the overlap between the financial interests and the work of the agency.
Absolutely, Patrick. Okay, let's go on to the next slide, please. Okay, so now we're looking at the 278 for Chris Clear. First off, your handout should have come with the instructions to the 278. I sort of recommend that you take the time to go through the instructions. It's 11 pages of very fine print. But once again, if you're not familiar with this, or if you're refreshing yourself, it's a really good source of information.
I find when I'm talking to filers that maybe 30 or 40% of the questions that I receive can be answered by a careful reading of the instructions.
Absolutely. And if you're familiar with them, then you can say to the filer, look on page 1, which contains the definition of an EIF, for example. Go through it with the filer, and then hopefully that makes your day a lot easier. Okay, let's go over the cover sheet. If we were to get this in our ethics official office, what is the first thing we would notice? It's not signed. So our filer didn't sign it, so we know we're going to have to go back to our filer anyway. But you know what? As long as we have it in our hands, we're going to go over the entire form so that when we do go back to the filer, we're going to hit him or her with everything instead of going back piecemeal. Trust me, and if you've done this before, you're familiar with this. Federal government employees don't like filling this out. They don't want to spend any time on it. And if you make it easier for them, they will make it easier for you, and hopefully they can just get this exercise done and then get back to their jobs. Okay. So once again on the cover sheet, we also noticed that on the lower right-hand side, where it says agency use only, it was not date stamped by our admin staff when it came into our office. This is very important, and OGE looks for this when they do their review, because that essentially starts the 60-day clock. And we have 60 days to review these, even though they're releasable in 30 days. Okay, let's go back to the top of the form. On the top left, date of appointment. That should be filled in either by the agency ethics official or by the filer. That tells us when the filer actually started on active duty. To the right of that is the reporting status. And we have a check there for our incumbent filer because, once again, it's somebody who's been with our agency for a while, so they're just doing the annual reports. The calendar year covered by the report should be the prior calendar year. And once again, if we had a new entrant or a termination filer, that information would be filled out there. On the right-hand side column, it starts off with fee for late filing. We actually do charge people $200 if they file the report late. The authority to waive that has been passed down by OGE to the agencies. Below that,
I'd just note, if you're sending these reports to OGE, if they're PAS reports, and the report is filed late and you've not granted an extension, please make a note in the comments that either you collected the late filing fee or you waived the fee. Otherwise, we're going to come back and ask you that every time.
Absolutely, absolutely. Below that is just some more reporting information on the reporting periods, the time periods covered by the prior report, et cetera, et cetera. Okay, let's go back up to the left top, reporting individual's name and position. This is for our information so we know who the filer is and what the filer's duties are, because basically what we're going to do with this is compare the filer's duties to the filer's holdings and determine if there is a potential conflict of interest. And once again, by potential, I mean the filer can own whatever the filer wants to own as long as they don't take an official action that could impact on that holding. So what we want to do is compare the duties to the holdings, and if there is a potential conflict, we want to remedy it before the filer does take an official action, because if the filer has taken an official action, then we have an actual conflict of interest, and we have to report it to the IG, and they have to refer it to DOJ. So that's kind of a big deal.
Yeah, and I think that's important. We want to make sure that we're getting to this information as soon as possible, because we much prefer to deliver prospective advice rather than uncover a potential violation, especially if we've had the information for some time and just haven't gotten around to or haven't gotten to looking at it. So you want to take a look at these as soon as possible and prevent conflicts of interest to the extent you can, because that's a much better position for your agency, your filers, and your program to be in.
Absolutely, and OGE used to call this concept of COI first. And for example, if you know you have a problem child, somebody who has a lot of outside holdings, and somebody who's, for example, a procurement official who has a higher potential of a conflict, you might want to read that person's report first. Or you might want to do a quick skim of everybody's report to see if you see any potential conflicts there, and then go back and do your technical review. However you want to handle it at your agency to better serve your employees is what we recommend.
Excellent. That's really good advice.
Okay. Let's now, below that are the signature blocks. That's where our filers should have signed this. If you have an intermediate review, then that person would sign it there, presuming you want to track that. Below that is the signature of the designated agency ethics official / reviewing official, and that's for your final agency review authority. And that's kind of important because it says, on the basis of information contained in this report, I conclude that the filer is in compliance with applicable laws and regulations, subject to any comments in the box below. So once again, you're sort of saying, my employee came to me, they told me the holdings that they had, I already know what their duties are, or I found out what their duties are, or I used my intermediate review to scrub those duties, and my employee is okay. That's kind of a big deal.
Yeah, and I like to think of this as an occasion for advice and counsel. So when they file the report, it's important for us to advise our employees about any potential conflicts and any steps they need to take to avoid potential ethics concerns.
Absolutely. This is a really good opportunity to do a one-on-one FaceTime with your senior employees and educate them or remind them about the potential conflicts of interest. Below that, if you have a PAS or a DAO, well, obviously you have a DAO, OGE also reviews those reports, and we take a very, very close look at these. And if we see questions, we go back to you, because these are releasable to the public both by you and by us. So we want to make sure that they're clean. And in fact, we post most of them to our website now. Below that, where it says comments of reviewing officials, just to highlight what Patrick said before, if you have anything going on, for example, it specifically says if you granted a filing extension so that the filer wouldn't have to pay the $200 fine, great, note it there. If the filer did submit it late and you waive the $200 fine, great, note it there. If you had any other issues with the filer, for example, if you had to go back and find out more information so that delayed your review, by all means note it there. Okay, it just makes it easier when we do our review and once again when the public looks at these.
Absolutely. And if you do send us PAS reports here to OGE or DEA reports, we did a broadcast last Thursday that had kind of the top 10 errors that we see, and that's a short broadcast that can save you some time and aggravation going back and forth with us during our review process.
Okay, let's go to the next page, please. Okay, this is Schedule A. On the top of the page should be the filer's name and the page number. Once again, in the future, we're moving on to the 278E and to integrity, so this will be less of an issue. But if you're still dealing with paper 278s, and you probably will be for the next 6 years, we recommend that you annotate these with that information. So in case you have to copy this for release and you're walking to the copying machine and you trip and stumble and they all scatter, you can reassemble them easily. Let's take a look at Block A on the top left under Assets and Income. What we're looking at here is information for the filer, the spouse, and dependent children of any asset held for investment or income, which had a fair market value of $1,000 at the close of the reporting period, or which, generated more than $200 in income during the reporting period. Also, the filer and the spouse have to report, the filer has to report the source and actual income, earned income, over $200 during the reporting period. And to make it easier for reporting on the spouse has to report any income over $1,000, except they don't have to report the actual amount, except for honoraria. And honoraria is a speech, writing, etc. It can be a big deal for some people, and for some reason Congress thought that was a higher potential for a conflict of interest. That's why it has a more strict reporting requirement. To the right of that, for that column, is the valuation of assets. These are not net worth statements. We only need the filer to report the value of the asset in a range. To the right of that, which is untitled, that column talks about accepted investment funds. And those are, as you know, those are a big deal for us, because if an asset qualifies as an EIF, we don't need to report the underlying assets. You may need to do a search for that in your conflict of interest analysis, but for basic reporting requirements, that is not required.
Yeah, I think it's important to note that the accepted investment fund category is a reporting category. If an asset meets that category, we don't have to report the underlying assets, but that doesn't relieve us of the obligation to conduct a conflicts of interest review, and it doesn't automatically mean that a regulatory exemption will apply under 18 U.S.C. Section 208. If folks are interested in learning more about these categories, last spring we did a presentation on the IEG YouTube channel that discusses EIFs versus diversified mutual funds. So if you want to learn more, you can do so there.
Okay, and to the right of that, where it says accepted trust and qualified trust, we're not going to go into that now. If you have any trust issues that you can't resolve at your agency, by all means contact your desk officer. OGE has a lot of guidance on this. There's been a lot of change in the last, let's say, decade or so on how to report or handle trusts. To the right of that is where the filer reports income. the type and amount, dividends, rent and royalties, interest, capital gains, and once again, the amount is just in a range. However, to the right of that, if the filer has outside income, then for the filer, we need the type and actual amount.
And that's for earned income, right, Mark?
Exactly right,
Yeah.
Patrick.
Excellent.
That's for earned
So
income.
if they have like an outside job or something, they'd report the specific amount of their salary or other compensation.
Absolutely. And to the right of that, if they are involved with the honoraria, if they do speech and writing teaching, then they would give the date and amount of that. Okay, below that, remember the none block? For all of these schedules, if the filer really doesn't have any entries, then they have to check the none block. If they don't, and it's a report that comes to OGE, we will go back to the agency on that. Okay, below that, let's take a quick look at the examples. The first entry is Central Airlines Common. We can sort of assume that that is a stock. It has a value of $50,000 to $100,000. It has an income type of dividends and an income amount of $1,000 to $2,500. That's a technically sufficient entry. And for our conflict of interest purposes, we would take it from there. If our filer works for the FAA, then that may be of some conflict of interest concern from us, and we do our conflict of interest analysis based on that. Below that, where it says Doe Jones and Smith, hometown state, we have evaluation of assets, and to the right of that, we have a law partnership income of $130,000. So for that example, we're presuming that we have a new entrant who is coming into the federal government from a law partnership. That person had a equity interest in the law firm that they checked as an asset and an income from the law firm that they specifically listed out. And once again, we would start our conflict of interest analysis based on that. Below that is Kempstone Equity Fund. I'm presuming this is a mutual fund. If I wasn't sure, I would jump on the internet and look it up. We do have a value of that asset, and we do see an EIF block checked, so we don't need any underlying assets. We also have an income, but not a type.
Also,
and once
because
again,
it's an EIF, right?
exactly right, Patrick. We don't care about the
Type of income for the EIFs. We don't need to report that.
exactly right. The entry below that is an IRA with the Heartland 500 Index Fund. When we see something like IRA, we know it's just a holding entity, and we know we're going to need the underlying assets broken out because the IRA itself is not going to qualify as an exempted investment fund, but we're presuming that the only underlying asset is the 500 Index Fund, which once again we presume, but we'll double check, is an EIF. And once again, that entry is technically sufficient and will probably not be a conflict of interest. Okay, so let's go on and go look at our actual entries. We're gonna handle this in a two-step process for our training purposes. First, we're gonna determine whether or not the entry is technically sufficient, and then we're going to think of any potential conflict of interest issues that we may have. So we're gonna get that all together when we go back to our filer. For the first entry, it says condo. That's great. The first thing I would do is look at the prior year's form. And if a filer had a condo there, I'm comfortable with that. Technically, I'd want to see a city and state for the condo. I'd want to see a value, which our filer omitted. I see that the filer checked rents and royalties.
So
I'm comfortable with that. Sorry, go ahead.
Yeah, I see that, and that suggests to me that this is a condo that's indeed being held for investment purposes because they're making income through rent and royalties on the property. So that kind of allays any concern that they might have inadvertently reported their primary residence. Is that right?
That's right, Patrick. And we're not going to get into the Stock Act requirements for this training. But if you've been doing this for a while, you're familiar with the Stock Act mortgage reporting requirements. And also, we're going through this for our training purposes, one schedule at a time. When you do this in your agency for real time, you're going to be flipping through these things. If you see a condo, you're going to go to Schedule C to see if there's a mortgage, et cetera, et cetera. So for our purposes, though, we're just going through this one step at a time. We do have some technical issues. We're not sure if having a condo could be a potential conflict of interest. Obviously, if he's renting it at exorbitant rates to a contractor, that could be an issue. But for our purposes right now, we're just good with this entry.
Yeah, because I think that the times when I get concerned about real property on filers' reports is if they're in the business at the agency of purchasing real property. If they select our facilities or they are engaged in renting office space for functions that take place with the agency, that's an area where real property might pose a problem. But we don't have any indication that Mr. Clear is involved in the acquisition of real property for the government.
Correct. Okay, so let's go on to entry number 2, Clark Inc. Now I'm going to ask you, Patrick, if you were a reviewer and you saw that entry, what would you think about that?
Well, it looks to me that this might be the spouse's salary. Is that what that S indicates, Mark?
Normally that would indicate that, yes. So our filer has technically over-reported the spouse's salary.
Because he provided the exact amount, right? That's not necessary in this case.
Correct. We would love to see the filer write in the S so we know it's a spouse, and then write in just salary without the amount. So that's great. But what else do we notice about Clark?
I also noticed that Clark Inc. appears on our prohibited sources list. So they're an entity that either we regulate, do business with, or contract with. So there's at least a potential concern that the spouse's employer might have some overlap with the agency's responsibilities. I think I want to ask then whether or not Mr. Clear had any responsibilities that overlap with Clark Inc. And I'd probably look back at any prior reports to see how long his spouse has worked there and to see if we decided to implement any remedial steps to prevent a conflict.
Absolutely. Well, this is one of the values of looking at the prior year's report. Presumably, Chris Clear's spouse worked for Clark when Chris Clear came on board, and all of those issues were scrubbed when he was a new entrant.
Or so we hope.
If we're seeing this for the first time, then it's kind of like an oh boy moment, and we need to go back and we need to ask a lot of questions about the spousal employment. Is the spouse a senior executive, or does the spouse work in the steno pool? Does the spouse get more than a salary? Does the spouse get other bonuses, benefits, phantom stock, things like that?
That's a question I always ask, and am often shocked at how frequently filers forget to report assets related to their spouse's outside employment. So I'd just like to re-emphasize that that's a good question to ask, and is often a fruitful question to ask.
Absolutely. And when Congress first created OGE and this form back in 1978, that was a really big deal. The spousal interests are imputed to the filer. And as you can imagine, well, first off, back in 1978, if you're a nerd like me and you go back and read the old newspapers, you would have thought that every senior federal government employee was going to resign rather than fill out this form. But hey, we're still here. But this particular issue was litigated all the way to the Supreme Court. The Supreme Court denied cert, essentially upholding the lower court's opinion that Congress had actually done a pretty good balancing act between the public's right to know and privacy interests when it comes to financial holdings. Essentially, Congress didn't want filers to hide assets through an intra-family transfer, and so that's why we're in the situation we are now. The balance is that we don't need to know the exact amount of the spousal salary. Once again, though, if you're seeing this for the first time, you have to go back and do a total scrub on what the filer spouse's employment deal is. Okay, entry number 3, pension, E&E engineering. What do you think about that one, Patrick?
I always get concerned and confused when I see the pensions reported. I know there are a couple of kinds of different pensions that we might see, and often filers don't report these correctly. So I think one of the concerns I would have is this a traditional pension or what we call a defined benefit plan? Or alternatively, is this a defined contribution plan like a 401k? Because I know in that instance we need to look at the underlying holdings of the pension rather than the sponsor of the plan. And I think if it's a traditional pension or a defined benefit plan, the concern we have is that someone would be taking government action that would affect the ability or willingness of the pension grantor to make the payments under the pension arrangement. Is that sort of the right way to start unpacking these things?
Absolutely, Patrick. And once again, if you see something that you don't recognize or wasn't on the prior year's report and vetted then, you need to do your homework, you need to do some digging, jump on the internet, try to track out what it actually is. And also for our reporting purposes here, that should show up on Schedule C. Presumably, it's the filer's plan. The filer used to work for E&E Engineering, and probably that's why we hired him for those skills. And all that was vetted when he was a new entrant.
Again, or so we hope.
Or so we hope.
So we want to confirm that before we certify the report. Look back and see if it's dealt with in the notes.
Exactly right.
Excellent.
Exactly right. And we have some technical issues there. The filer reports on interest income, but doesn't give an amount and doesn't give a valuation of the asset. Depending on the type of pension, the value may not be readily ascertainable, and it may not have an income if the filer isn't collecting it yet.
And we also want to see consonance between this entry and any entry on Schedule C, the agreements or arrangement section?
Yes, we would.
Excellent. So we might be able to find more information to make the entry complete there.
Absolutely. Okay, entry number 4, Harris Utility Fund. Once again, if we didn't see this on the prior year's report, what would we think about this?
This causes me some concern because we are the EUA, or the Electrical Utility Agency, and Harris Utility Fund falls on our prohibited sources list. So we at least know there's a nexus between this fund and the work of the agency. So I think my next question would be, given that, does it pose a potential problem for Chris Clear?
Absolutely. And once again, we can use the prohibited sources list as a cheat sheet. If we're seeing this for the first time, what we would do is go back to the filer and say, what are you doing? Why did you acquire this holding? Don't take any action that could impact Harris Utility Fund. Just call in Allstop, call in your boss, the filer's boss, everybody, general counsel, everybody, and just say...
We want to do that as soon as possible, right? We don't want to be in possession of this information and then have Mr. Clear go ahead and participate in a government matter that would affect Harris, because that could be potentially problematic, or definitely problematic for both Chris and our agency.
Absolutely, absolutely. Resolving and remedying potential conflicts of interest is what we do here. Although I have to admit, it's technically sufficient reporting, so at least he let us know what he was doing, and that's great.
He's given us an opportunity to advise him fully.
Absolutely. Okay, so the next entry is Pearson LP. What do we think about that, and what does LP mean?
I think LP means limited partnership. And I think my first question is going to be, what is Pearson LP? What kind of business are they in? And also, experience tells me that filers who participate in limited partnerships sometimes have associated outside positions. They may be an officer of the partnership or an actual partner in the partnership. So I'd want to know if there's any associated outside activity, and if there is, we want to be sure to advise fully on that. But also we want to find out what Pearson LP is, what the nature of the business is, and what the nature of Mr. Clear's relationship to the partnership is.
Absolutely. And even before that, our filer sort of left us hanging here. It says Pearson LP, but as Patrick indicated, we don't know anything about that. And plus, the filer didn't fill out Block B or Block C. So we know we're going back on that one anyway.
Yeah, we're going to have to find out, is this income, earned income, where we need a specific amount, or is it an equity interest that they hold for investment purposes, where we need what valuation, income type, and then amount, if any.
Mm-hmm. And once again, this is one that presumably it's a holding that was reflected on a prior report. Then we can pen and ink the other information in there. We'd obviously want to look this one up on the web. But if it's new, bang, we're going back to the filer and getting the story on this one.
Excellent.
Okay, if we could go to the next slide, please. And let's start with Schedule B, Part A. Part 1, excuse me.
Schedule B, Part A.
I know. We're going all to numbers after this. But for our transactions, we want to have the filer report any purchase, sale, or exchange, and once again by the filer, the spouse or dependent children, of any real property held for investment or any securities in excess of $1,000. There are some things we don't have to report. Also, this brings up the concept of the certificate of divestiture, which is if we require that a filer divest of certain holdings, that would be reported here on this schedule. Once again, remember the none block. If the filer just writes in NA, not applicable, that's incorrect because this applies to annual filers and they have to fill it out. If they didn't have any transactions, checking the none block is okay. Let's take a look at our example. And once again, we see Central Airlines Common, which we also saw on Schedule A. And it shows a purchase of Central Airlines common stock. The date, let's just presume that's a current date for the reporting period and an amount. That's a technically sufficient entry and is also reflected on Schedule A because now the filer owns Central Airlines common stock. So we're looking for the transaction type, the date, and the amount. So let's take a look at our entry number 1. Power Parts, Inc. And let's once again put the burden on Patrick to...
I always like to start when I'm doing my COI first analysis on the transactions portion of the report. Because if filers complete this completely or accurately, it's the place where we'll be able to see changes from last year or any new assets that might pose us problems that we haven't seen before. But in this case, I think Power Parts, Inc., it looks like it's a purchase here. And they also appear again on our prohibited sources list. So it would seem that our filer has gotten a hold of the prohibited sources list and is determined to purchase all of the assets reported thereon. So I think again we have an overlap between at least the work of the agency and the holding, and then potentially a nexus between Mr. Clear's responsibilities and this holding. I also note that we didn't see Power Parts Inc. on Schedule A, which also causes me some concern.
Absolutely. Yeah, automatically we have a problem here, both technically because the filer didn't include it on Schedule A and as a potential conflict of interest because it's on our prohibited sources list. How about entry number 2, Moxie Industries?
Well, Moxie again is a purchase, and it looks like he's not given us an amount of the transaction, so technically we're going to have to go back for that. And again, Moxie appears on our prohibited sources list. So we have the same problem yet again, which is since it's on the prohibited sources list, we know it's a conflict or a potential conflict for someone in our agency, potentially for Chris. So we'd want to look at his duties within the agency and determine if there is a nexus there. And I think in both of these cases, we want to call Chris as soon as possible and out of an abundance of caution, ask him not to participate in any matters that would affect either Power Parts or Moxie.
Absolutely. And we're not going to get into the Stock Act during this presentation, but if you have filers who are PAS types, they're required to do the 278T reports.
Yeah, now that our public reporters have to complete the 278T, you're right, Mark. We would hope that we saw these before on a 278T. That's actually very nice for us because we can give more timely guidance. If we saw these on the 278T, within a couple of days of the purchase, we have an opportunity to prevent Mr. Clear from participating more timely, and the possibility that he would inadvertently participate is lessened.
Absolutely. And also remember that the 278Ts have to come to OGE as well. Okay, let's take a look at part 2, gifts, reimbursements, and travel expenses. Once again, this applies to the spouse and dependent children as well. We need the source, description, and value of gifts, and a gift is essentially anything of value, and travel-related cash reimbursements. The gift amount now is $375. It changes, or essentially goes up, every 3 years, and then OGE will send out an advisory telling the agencies that. There are exceptions to this, and also remember, we're talking about just gift reporting. We're not talking about standards of conduct gift issues yet. Once again, there is an unblock. So let's go down to the examples. For the source, the first example has the National Association of Rock Collectors. A brief description is an airline ticket, hotel room, and meals, which is essentially an itinerary including a date of personal activity unrelated to the duty and a value. The second example is a leather briefcase gift from a personal friend. Presumably that's not going to be a conflict of interest, and an amount for that. Okay, let's take a look at the first entry, Castle Associates. It's a 14-karat gold pen and pencil set and paperweight valued at $320. Patrick, what do we think about that?
Well, I have a couple of issues. I think on the technical side, we have sort of an interesting case where this might not be reportable because the $320 might be less than the reporting threshold for Schedule B Part 2. However, my bigger concern is that they appear on the prohibited sources list, and as you mentioned before, the prohibited sources concept comes from the gift regulations, and unless an exception applies, employees are prohibited from accepting gifts from prohibited sources. So I think the first thing I'd do is look in my advice folder and see if we saw this gift during the year and if we provided any advice or advised the employee about potentially using an exception. And if that isn't the case, I would want to maybe get Mr. Clear on the phone and discuss remedies for the improper acceptance of the gift, or ways that he could dispose of the gift consistent with the principles in Subpart B.
Absolutely right. The filer did over-report it, but now we know. And since we know it, we have to act on it.
We can't ignore it.
We cannot ignore it. And it immediately also triggers, as Patrick indicated, the standards of conduct issues. Remedy, of course, could be just returning the gift, paying fair market value, et cetera, et cetera. Okay, entry number 2, Nuclear Energy Institute, conference in Phoenix, Arizona. What do we think about that one?
And I think these are always kind of tricky. I see a lot of these where sometimes this is a gift that the government might have accepted and the filer has inadvertently over-reported. So somewhere I might start is to see if maybe we'd accepted this under 31 U.S.C. 1353, which is the government's gift acceptance authority for travel payments from outside sources. Failing that, I want to see if we had taken a look at this at the time he attended the conference or went on the trip. We'd also want to see what the $789 covers. Do we have an itinerary? Do we know if this covered a hotel stay? We could have some more information to provide a more complete
itinerary.
Entry. Yes, yes, exactly. So that's sort of where I would start, and then determine whether or not an exception was used to accept it personally, or if the government accepted it. And if the government accepted it under 31 U.S.C. 1353, I think we can go ahead and delete it. Is that right?
That's right. It's over-reporting because that's actually a gift to the government and not a gift to the individual. So that's over-reporting. We could white it out once we ascertain that, and then we wouldn't have to worry about that one anymore. And as Patrick indicated, and based on my experience, usually the legal office handles those gift of travel issues, and the standards of conduct and the financial disclosure. So presumably we would have known about that one already and just say, no, you didn't need to report that, let's move on.
And I think this is another example of having lots of efficiencies if we can readily put our hands on records of ethics decisions that were made over the past year. We can save ourselves a lot of time when it comes to financial disclosure review if we can quickly make that determination.
Absolutely. Okay, let's move on to Schedule C, liabilities. Okay, and let's look at Part 1. Essentially, what we're looking at is any debt over $10,000 owed to any one creditor at any time during the reporting period. And once again, this applies to the filer, the spouse, and the dependent children. There are certain exclusions. Once again, we're not going to go into the Stock Act, but certain filers, PAS types, do now have to report mortgages on personal residences. There is a none block as well. The information we're looking for is the creditor's name and address, the type of liability, date incurred, interest rate, term, and once again, the category of the amount, not the exact amount. For our examples, the first one is First District Bank of Washington, D.C., mortgage on rental property, so we would expect to see that also listed on Schedule A. The date it was incurred, the interest rate 8%, the term 25 years, and our value, that's a technically sufficient entry. The next example is John Jones. It's a promissory note. It was incurred in 1999, 10%, due on demand, and an amount. Once again, that's technically sufficient. We may have some questions about conflict of interest depending on who John Jones is, but let's move on to our entry number 1, Wagner Bank. What do we think about that one, Patrick?
So I guess I'd have a couple of questions. What property is the Wagner Bank mortgage associated with? Is it associated with the condo that we saw on Schedule A? In which case I believe it would be reportable for all public filers because it's not the primary residence. Or is it a mortgage on a primary residence, in which case we'd have to look at the Stock Act reporting requirements. Technically, it looks pretty good. We have the date incurred, the interest rate, which looks sort of high for today's standards, but it looked like it was a while ago that it was incurred. So maybe our filer hasn't gotten around to refinancing. We have the term, 30 years, and then we have the amount, the category of amount or value. So that all looks correct. Wagner Bank doesn't immediately seem to me to pose a potential conflict with the Electrical Utility Agency. So we may be sort of in the clear once we determine, if this is in fact reportable.
Excellent, excellent, great. Let's go on to number 2. Paul Clear, it's a personal loan. Is at 0%. Is that filled out technically correctly?
Well, here we don't have the term or the amount or value of the loan, so we'd want to get those. And I think we'd also want to find out, who Paul Clear is. Is Paul Clear potentially a prohibited source? In which case we might have some gifts concerns, particularly given the low interest rate. Or as it seems to be here, is this a family member, and this is a family loan which would be reportable but would probably lessen our conflicts of interest and gift concerns.
And in fact, if Paul Clear turned out to be a relative, and we would have to check our relative definitions in the regs, then it would not be reportable at all. But we don't know that.
We don't know. So again, we have to determine, if is it reportable, and also, who is this person, and do we have a potential gift issue?
Absolutely. Okay, let's go on to Part 2, agreements or arrangements. What we're looking for here is essentially any agreement or arrangement for the filer for past, current, and future employment. And current employment could be a leave of absence. We see that a lot with college professors coming into federal government service for a specific period of time, knowing that they're going back to their presumably tenured positions. For past employment, typically we see pensions, but a very big point here is future employment, because if our filer has an agreement for future employment, then our filer has a full 208 relationship with that employer. Once again, we do have a none block that needs to be checked if appropriate. So for our example, under status and terms of any agreement, pursuant to partnership agreement, will receive lump sum payment of capital account and partnership share calculated on service performed. That's what you would typically see if somebody is coming from a private law firm into government service. The parties are, of course, the law firm and the date as applicable. Okay, let's take a look at entry number 1, pension plan with E&E Engineering. What do we think about that, Patrick?
This is a case where, I think when we looked at this on Schedule A, we had some questions. So I think the first thing we want to do is make sure we have consonance between the two schedules. We'd also want some more information about this plan. Is it a defined benefit plan? Is it a defined contribution plan? Are folks is E&E Engineering continuing to make payments towards this plan? Is there a receivable? Those kinds of questions. We want a more complete entry here. We want the terms of the arrangement, I think is what we say in the instructions.
Absolutely, absolutely. Okay, and let's go on and take a look at entry number 2, pension plan. Not a lot of info there.
Not a lot of info there, but again, this is with Clark Inc. So I think we'd want to make sure that it is the filers and not the spouses, because I think we found that the spouse was receiving some income from Clark Inc. And if it is the spouses, right, we don't have to report it on Schedule C Part 2, but it would still remain as a source of income on Schedule A. If it is indeed Chris Clear's pension plan, we're going to have all the same questions. What are the terms of the agreement? What kind of pension is it? Is it a defined benefit pension plan or a defined contribution plan? And if it's a defined contribution plan, or in any case, we want to make sure that that gets moved over to Schedule A and any applicable underlying assets are reported, and we can do our conflicts of interest analysis from there.
Great, great. Okay, let's move on to Schedule D. And we're looking at Schedule D, Part 1, positions held outside the U.S. government. Essentially, we're looking for any position with a financial interest or a fiduciary responsibility here. The positions include but are not limited to those of an officer, director, etc., etc. However, anything with a religious, social, fraternal, or political entities are not reported. Also, those of solely an honorary nature. Once again, we have an N block. So let's look at our examples. First organization is the National Association of Rock Collectors in New York. It's a nonprofit education organization. Our filer, in the example, our filer is the president from 92 to the present. Probably not going to be a conflict, but it is technically reportable, and that is a technically sufficient entry. The next one is Dow Jones and Smith. It's the law firm. He's a partner from presumably 1985 to the present, and this is what a new entrant would report because he has this outside position during the reporting period for a new entrant or nominee report. Okay, let's take a look at our example number 1, Valley Park Condo Association. Technically, what do we think of that one, Patrick?
This looks actually sort of okay to me. There's one thing that sort of stands out, and that's that he hasn't served in this position in almost 5 years. So maybe this is over-reported. Maybe it's a vestigial position that he reported a long time ago and just hasn't bothered to take off. In terms of a conflict, I don't see any immediate concerns with Section 208 in the Valley Park Condo Association. If he had to do in this role any interaction with the federal government, we might have some representational concerns under 18 U.S.C. Section 205. But again, it looks like he hasn't held this position in quite a while.
Great. Okay. Let's take a look at entry number 2, Electric Coalition of America.
So this looks like a trade association position, but he notes that he is a consultant. And again, these folks appear on our prohibited sources list. So something I'd really want to see is if we had provided him any advice on this, either as a result of previous filings or as a result of any prior approval for outside activities. And we would hope for some fairly robust advice if we have a filer serving or any employee serving as a consultant to an organization that's a prohibited source for the agency. So, that's a concern I'd have. I'd also want to see if on Schedule A there would be any reportable income, consulting fees or otherwise.
Absolutely. And I got to tell you, back in my agency days, if I saw an entry like this and I didn't already know all about it, I would call all stop to everything because having one of our federal government employees be a consultant to a trade association that deals specifically in what our agency regulates is a really, really big red flag.
So you'd push the proverbial red button.
I would push the red button on this one. Also, I'm presuming that he's not consulting for free, so I might check. Really, after everything had calmed down, I might check Schedule A again to see if he reported any income. But if he has an outside position, and if my agency has outside position requirements, and I don't already know about it, yeah, we're going ballistic on this one. Okay. Since our filer is an annual filer, we don't have to worry about Schedule D Part 2. It is 3 o'clock now. Would we want to take 5 minutes?
I think we can take 5 minutes, and then we will come back and complete our second exercise with Mr. Nikolic. So those on the phone and those of you who have maybe taken a look at these materials already, you can take a few minutes to get those in order, and at 3:05 we will get back underway.
Okay.
No, don't stop. Just a slide.
We'll be back on in just a minute.
Okay, thank you. I'll open your line.
Thank you. And we're back from our short break. Welcome back, Mark. As instructors, we're human beings too, and sometimes we need a break. But we're going to be getting into the report of James Nikolic, which is a little more complicated new entrant report. But before we do that, we had a couple of questions come in during the break. Could you help us with those, Janisha?
Sure. The first question is, have you ever seen where a filer's membership as an officer on a condo board resulted in a potential conflict of interest?
I think that's a good question, and I think there's an implied question there, which is why do we have to report this stuff if it's very unlikely to pose a conflict of interest? And for both the 278 and the 450, we require information that sometimes poses conflicts and in many cases is completely innocuous under the conflict of interest rules, but is reportable anyway. Likewise with the 278, remember these are public reports, so there is a disclosure for its own sake element here. The Congress has decided that citizens have a right to know the outside affiliations and holdings of the most senior officials in government. But with a condo association, it's possible that there could be a potential conflict of interest if someone were engaged in the purchase or leasing of real property for the government. Another concern I always have here is potential representational issues. So if someone was the president or vice president or otherwise an officer of a condo association, if they had to make representations before the federal government, that could be a potential representation under 18 U.S.C. Section 205 and could inadvertently result in a violation. So anytime I see a position like that, I make sure that employees are aware that they cannot represent the condo association back before the government. You see this particularly when there are sort of environmental or other type issues that might come up. So yeah, it is possible to find an issue with a condo association.
I think one thing we need to remember here is that a lot of the reasons we do this is because Congress says so. So that's why we have the balance between the technical requirements of the report, which we have to do because that's the law, and the actual potential conflict of interest remedy portions, which may have nothing to do with 99% of most filers and most entries. However, they still have to do it. One thing that may come up in addition to potential representation issues are potential standards of conduct issues. If somebody's the member of a board and is using their official title to try to sway other board memberships or for other non-governmental purposes, then we might want to be able to counsel that person not to do that.
I think you make a good point that we have potential standards issues, particularly under subpart G of the standards. Mm-hmm. We'd also want to counsel folks probably about use of official time and materials as well, so that they're not conducting their condo association activities on the clock.
Absolutely. The only other thing I remember from back in the day was not really a condo related issue, but was a houseboat related issue where certain congressmen were getting discounted rates on their houseboats and yachts and things like that. But that's beyond the executive branch, so that's beyond us. And I see that. I'm sorry. Next question.
Yeah, I think we have one more question.
Yes. The next question is, if there is no income but they are still consulting, do you still list on Schedule A and enter none?
If somebody has an outside consulting position but is not getting an income, nothing would be reflected on Schedule A, but the outside position would still be reflected. We don't care about income or no income. We don't care if it's a not-for-profit entity or a for-profit entity. We just care about, in that position, we care about the fiduciary responsibility.
That's on Schedule D Part 1.
Yes.
So Schedule D Part 1, what we care is there a position or not, compensated or not. And Schedule A, we're just trying to capture sources of income.
Exactly right.
And so if you have one without the other, you'd indicate it in the one place and not the other, but if you have both, it should go in both places.
Absolutely right.
Okay, that's an excellent question.
Yeah.
Should-
Any other excellent questions out there?
No, I don't think we have any more questions, but if folks have questions, please feel free to use the app, and again, on the phone, we will have time for Q&A at the end. So let's get into our second exercise here, Mark.
Okay. Everybody should have the 278 for James Nicklick. We don't have any other information on him. Our scenario here is that in a perfect world, our ethics office has a great relationship with our HR office. And what we've agreed to do with them is that every time they have somebody apply to a covered position, HR makes them fill out a 278 and gets it to us before they're even hired. Okay? This is perfect for us because we can make our conflicts determination before the filer even starts work. So it's even before they have a potential conflict of interest. For our cover sheet, we noticed that our HR office is using an outdated form, but we can take care of that later. We also noticed that the filer didn't sign it. We can take care of that later. We're just going to use this as a draft and jump on it with both feet. The first thing we look at is James Nicklick is applying for the position of director for our agency.
So we have a potential new agency head.
Yeah.
Well, that's good.
Yeah, we're going to look at this one pretty close. First thing we're going to do just on the cover sheet is make sure that's not a personal address and phone number, because once again, these are publicly releasable. We want it to be at least an office address and phone number.
Yeah, we don't want anyone driving by Mr. Nicklick's house and maybe harassing his family members.
Absolutely. So we're going to go through this and we're going to look for technical sufficiency and potential conflicts. We're also going to determine whether or not we might want James Nicklick to enter into an ethics agreement with our agency. In other words, agree with us to take specific actions if he is hired or nominated and confirmed, et cetera, et cetera. So we're going to have a big list of questions that we're going to go back to our filer on, because hopefully we're also going to get the chance to discuss this with the filer during this process. Okay, so let's take a look at the first page. I'm sorry, Schedule A. Once again, we'd want to have a name and page number at the top, but we don't care about that right now. Let's take a look at entry number 1. It says Big Private University, Springfield, Tennessee. We also see a salary exact amount. This looks technically sufficient, but do we have any other concerns with this, Patrick?
I have some experience with nominee reports and new entrant reports of officials coming in from academia. And they can be complex in some cases. This entry here does seem to be correct. It would be a factual question as to whether or not we have a potential conflict with Big Private University. And the forms that could take are things like technology transfers or research agreements or even agreements to provide training. There's a possibility that our agency could procure education services from the university or partner with them for research. I'd also want to see if Mr. Nicklick plans to go on a leave of absence. And if he does, what are the terms of that leave of absence? And also, does he have any other assets or benefits associated with his position at the university that would need to be reported? In my experience, sometimes those things can be rather complex. I've seen where universities actually hold the mortgage on the house of members of the faculty, to a benefit that they offer. And I'd be concerned, both about the potential for conflicts of interest if our agency does business with the university, but also potential supplementation of salary concerns if he's going to be retaining benefits during public service. So one of the questions I'd have is, are these benefits pursuant to written agreements, and are they offered to everyone who goes on a leave of absence?
Okay, great. Along the terms of other benefits or income associated with a Big Private University, let's take a look at entry number 2, a 403B at BPU, and I presume that's big private university. We have an asset valuation. We have an EIF block checked, and we have an amount of none. What do we think about that?
I'm going to call foul on this one, Mark, because I'm a little bit familiar with the 403Bs, and these are kind of the analog of the 401k, but for certain professions. It's basically the same as a 401k. It's treated a little differently under the tax code. But these also typically have underlying holdings. Usually they're diversified mutual funds, but there are various assets that are held within the plan that would need to be reported. And while those underlying holdings might qualify as accepted investment funds, the plan itself is not going to. So we would need Mr. Nikolic to disclose those for us.
Could we go forward one slide, please? Okay, if you have broken out the Guide to Reporting Selected Financial Instruments PDF, this is the table of contents. And if you take a look at that, you will see that there's actually an entry for 403B plans. And if you could go forward one slide, please. This is actually OGE's specific guidance on 403B plans. So once again, there is a lot of guidance out there. I really want to push the resources side of this. I'd heard of a 401k. I'd never heard of a 403B. Through my entire career, I was dealing with checking and maybe a savings account, and that was the limit of my experience with financial instruments. So if you take a look at that, it will go through everything that Patrick just talked about, and you can use that as your guidance for both technical requirements and for potential conflicts of interest, and how to, as well as how to report it. Okay, if you could go back 2 slides, please. Okay, let's take an entry, take a look at, obviously we would also do as Patrick indicated and look for ask about any other specific potential benefits or any other sources of income for this filer.
And speaking from experience, you might want to ask that question a few times because sometimes it takes a little while to knock loose the recollections of those various benefits.
Absolutely, and we've seen this a bunch of times, both Patrick and I, where we get the first annual report and the agency ethics official has written in, filer has inadvertently omitted such and such and such, either financial assets or outside positions or things like that. That's very, very common. Okay, so let's take a look at, let's look at entries 3 and 4 together. What do those appear to be, Patrick?
So it looks like we have a couple of honoraria. So these could be for speaking, teaching, or writing, which would be consistent with someone coming in from a university. I think, one of the questions I'd have is, have these been received or are these receivables? Because we're going to have an ongoing financial interest if these have yet to be received. And we would be concerned that Mr. Nikolic might be able to take official action that would affect the ability or willingness of these organizations to pay him his honoraria. Mm-hmm. If these have already been received, then it's important that we disclose these for their own sake, but we have probably fewer concerns under the standards of conduct and the conflict of interest rules.
Right, and technically we do need the date, once again, to be technically clean on these. We do need the date of honoraria. Also, we might want to add as part of our counseling, you could do that as a civilian, but you probably can't do that as a federal government employee anymore. So we'll just add that to a list of counseling that we're going to give.
So what you do
Mr.
here is let Mr. Nikolic know that if he's invited to give speeches or teach or speak or otherwise write, and an honorarium might be involved, that he should seek advice from the ethics office before going forward with that kind of activity.
Especially if it's related to his government employment. But by all means, we want to make friends with Mr. Nikolic and have him pick up the phone and call us for any sort of activity.
Excellent.
Okay, let's take a look at number 5 now, Seagate Technologies.
All right, so that looks like the spouse's salary, and technically it seems correct. From a conflicts perspective, I don't know what Seagate Technologies is. It seems like maybe that could be a marine company. I think I'd have to look that one up.
Absolutely, absolutely. And along with that, we treat the spouse the same way we treat the filer in this case. So we do the same scrub on the spouse's employment. What sort of work does she have? Does she have any other benefits there? Does she have any other potential sources of income? Does she have any other connections there, I
Yeah,
guess?
because sometimes we see that, especially with private companies, if the spouse occupies a senior position there, that they could have stock or options. We typically see at least some kind of retirement plan that should be reported. So that would be a specific question I'd ask. Is there a 401k or is there a pension? And are there any other associated benefits like stock options or profit sharing?
Okay, let's take a look at entry number 6, Transocean Limited ADR. Patrick, do you have any idea what ADR is or what that entry is?
I do, and Transocean is interesting because I learned an important lesson as a real live reviewer here at OGE when I saw this on a report for the first time. If you type transoceanltd.com into your browser, you will find a company in the Pacific Northwest. And you know what they do, Mark?
No.
They make wood-burning stoves, cast iron wood-burning stoves.
Wow.
And listen, that's very interesting that a PAS official would be invested in a small Pacific Northwest company that makes wood-burning stoves. And I put that in my notes, and I was going over the report for submission a final time. I said, something about that doesn't sit right with me. So I put Transocean without anything else into my preferred finance search tool. And I found that Transocean is actually involved in equipment for offshore oil drilling. In fact, they're the largest such company in the world, which is quite a different industry than a small wood-burning stove company in the Pacific Northwest. So I sort of sussed it out that the filer actually had the oil company, the multinational oil company, rather than the wood-burning stove company. But then I had this question of, what is an ADR? And I learned, and we have this in our guidance, I think.
If we go forward 3 slides.
That it's an American depository receipt, which is actually a tool that allows American investors to invest in companies that are traded on foreign exchanges. And after I sort of figured that out, I realized that this was actually kind of important for us from a conflicts perspective. And that's because we have the de minimis exemption for publicly traded securities, which is $15,000 for specific party matters. And the concern I had was when we look at the definition of publicly traded, we see that it has to be registered with the SEC and also traded on an American exchange. And some ADRs, and in the case of Transocean, the ADR is actually traded on the exchange and is properly registered, so qualifies as a publicly traded security, and the de minimis is available. But that's not universally true. There are a number of companies that have ADRs that trade what we call over-the-counter or on the pink sheets that don't qualify as publicly traded securities. So every time I see ADR, I want to find out what exchange it's traded on, and if it's not traded on the U.S. exchange, I know that de minimis doesn't apply for us. So that's kind of a complicated scenario, but fortunately we have the write-up, so we don't have to remember it every time. That particular time scared me enough that I don't think I'll ever forget it.
Okay, so I guess the takeaway from this is that if you see something that you don't recognize, at the very least, and this is not an endorsement, Google it, or go to your agency financial,
or you can Bing it.
Bing it. I don't own stock in that either. Or contact your agency financial people or your desk officer. And because when I was a desk officer, I would take questions like that to our financial people. You have to figure out what it is before you can figure out if it's technically sufficiently reported and what sort of potential conflict of interest it is. And as Patrick said, if it applies for an exemption under 2640. Because as we know, 208 has no de minimis, but OGE has been given the authority to draft our regulations to say that, yeah, you can own this much in this sort of financial entity without it being a conflict. Okay, let's go on to the next slide, please. Okay, and this should be our continuation sheet for Schedule A. And the first entry there is QQQ Power Shares Trust. You want to take this one too?
Sure. So QQQ Power Shares Trust. I'm not sure immediately what that is, but if we're looking at this technically, we see that Mr. Nikolic has given us a value category, so that's correct. He tells us that it's an accepted investment fund, which we may or may not go along with, but at least he thinks it's a fund, the underlying holdings of which we don't need to report. Mm-hmm. It looks like he's over-reported the type of income here, because if it is in fact an EIF, we don't need the type of income. Mm-hmm. This is not something I usually go back to a filer on if they've accidentally over-reported the type of income for an EIF, and that's the only question I have. I'm going to let that go because it seems pretty harmless over-reporting. And we have the income amount. So the next question I'd have is, what is the Power Shares QQQ Trust?
Absolutely. Could we go to the next slide, please? This is where we jump onto our non-endorsed, yes,
search engine of choice, Mark.
And if you actually look up Power Shares QQQ and read the prospectus, you will find out that it's an exchange-traded fund. And once again, I have no idea what that is, but if we go to our guide, and next slide, please, we have an explanation of what an exchange-traded fund is. And essentially, it's like a mutual fund, but different enough to not be recorded under the 1940 Act. But the guidance here will tell you that it does qualify as an EIF, how to report it, and also that it also does qualify for our exceptions under 2640.
So the takeaway with these, I think, is that we treat them in almost all cases like a mutual fund, and the technical difference is the way that exchange-traded funds trade. They trade throughout the day. Mutual funds trade at the end of the day. That's not an important distinction for our purposes.
It's way over my head.
So OG has issued guidance that says that we can make them available. We can use the diversified mutual fund exemption. I would caution that there are a couple of funds that aren't going to qualify, and those are some of your commodities funds, because they're not registered with the SEC. They're registered with the Commodities Futures Trading folks, and therefore they don't qualify for the exemptions. But we see those very rarely. In most cases, the exchange-traded funds we can treat just like mutual funds.
Okay, great. If you could go back one slide, please. Yeah, there we go. Let's look at entry number 2, Fidelity Managed Account. What do we think about that, Patrick? Or do you want me to handle this one?
No, I think every time I see a managed account, usually the first thing I do is groan,
yes,
and then maybe hit my head against the desk for a little while, because this isn't going to be fun for anyone. Increasingly, we've seen these managed accounts, and these are
problematic?
They can be a little bit difficult. It used to be some years ago, if we were having this discussion 6 years ago, say, that very few people have managed accounts. That investors would have to have a great deal of money to make a managed account make sense from a financial perspective.
So a managed account is essentially an agreement between a person and a stockbroker, in which the stockbroker has the authority to buy and sell on behalf of the person.
Exactly. So it's like having a private broker. They go out and buy stocks and funds for you on a daily basis. They're trading them. But increasingly we see that the brokers or the account managers are managing a lot of accounts in basically identical ways.
Okay.
So they're executing a lot of different trades on behalf of a lot of different clients. So they're marketed in some ways like a mutual fund, with the important distinction that the account holder owns personally the underlying assets. So if within my Fidelity managed account I have, say, Boeing stock, I personally hold those shares. They belong to me as an individual. They don't belong to the mutual fund, which is a company in the case of the mutual fund. In this case, it's an account in which I hold the Boeing stock. So we have to do the conflict of analysis on each of those underlying holdings, and they have to be reported.
And so the EIF block is
erroneous. Erroneous is the EIF block.
Well, fortunately, we do have some guidance on this, so if we could go forward 4.
There we go.
There we go. Once again, if you're anything like me, short-term memory guy, you're not going to remember all the details that Patrick just went over about managed accounts, but hopefully you will remember where to look it up if you ever have a filer, put that entry in there. And the important thing is that
You'll want to bang your head against the desk.
they are not EIFs. And in fact, as we discussed earlier about potential ethics agreement issues, typically here at OGE, when we deal with the PAS types, we make them divest of managed accounts because the potential for a conflict is just so high because they have somebody else buying and selling for them, even though their ownership is imputed and could result in a conflict of interest.
Yeah, we've had some difficulty securing cooperation from account managers to keep people out of conflicting assets. And we've had a number of cases where an account manager has inadvertently bought something that could be problematic. So our general guidance is, you probably want folks to get out of them.
And we can mandate that as a condition of employment. Okay, let's go on to entry number 3, Mueller Water Products.
So here's another case where, technically it looks pretty good here. We have a small amount of value, so less than $15,000. So we may have our de minimis for publicly traded securities available to us. There's no income, so we don't need income type or amount. This looks like it's probably common stock, but I guess what we would need to do is find out what Mueller Water Products is, and then determine if there's any nexus between Mr. Nicklick's duties or proposed duties and this holding.
Absolutely. And once again, our good friend is the internet, so we would obviously look this up, and if it turned out to be a publicly traded stock, as Patrick said, then boom, that's a technically sufficient entry. Okay, let's go on to entry number 4, the Virginia 529. What do we think about that, Patrick?
These, I think, have become more popular in recent years, and these are our college savings plans, and they come in a few varieties. So we have the prepaid tuition plan, and it would be helpful if that's what this is, if it were described as such. The Virginia prepaid tuition 529 plan, which is really kind of like a savings account. Basically, you pay today's rate for college for students that are going to attend in the future. There is another variety of 529 plan that functions sort of like a defined contribution plan in that it's a tax-deferred investment account that allows us to save money for tuition for the future. And those accounts have underlying holdings. Typically, they're fairly innocuous. They're often life cycle funds or diversified mutual funds, so we just need to see that indicated. They're usually going to qualify as EIFs. But I think in some cases, some other kinds of securities are available. So the simple question is going to be, what are the underlying holdings and where they're reportable? They should appear on the form.
Great. If we could go forward 5 times, please. Is that it?
One more.
Oop.
Oh, never mind. Oh, yes.
Qualified tuition plans.
Yes, there we
Okay,
are.
once again, we do have specific guidance on this. The first thing I'd like to point out technically is that it's not really a dependent child asset. It's actually the asset of the filer because the filer is putting the money into it. The filer has control over the underlying assets. And quite frankly, if the filer gets mad at Junior, the filer can take the money back out of the plan. But as Patrick said, there are 2 types. For simplified reporting requirements, OGE has determined that if the underlying assets are in a specific plan, sort of like for our TSP, a yearly plan like our 2020 retirement plan, that's all the information that needs to be reported. The filer doesn't need to break out each and every underlying asset. So once again, OGE has guidance on this. And if you do see a question on 529 plans, and Patrick's right, they're more and more popular today, Apparently, my parents didn't know about them, but that's a different story. but they're just more and more common, and we do have specific guidance.
And I think, Mark, we have a couple of questions that have come in over the Hangout. So would this be a good place to pause
absolutely.
and take some questions?
Sure.
Yes, please, Kenesha.
Sure. The first question is, when it comes to listing underlying assets, I have encountered that a lot of people don't know what's in their plan. They have to check with their financial person, and sometimes this takes a lot of time. How is this generally handled?
Well, one of the reasons that we do this, make the annual reports due on May 15th, is that presumably people have just done their taxes and have all their financial records ready and available. Because trust me, the tax people pay a lot of attention to the underlying assets. Now, was this question specifically about 529 plans or about general retirement plans?
I think it was probably general plans.
In that case, yeah, unfortunately, they're going to have to go to whoever the fund manager is and get that information.
And sometimes here at OGE, we find it even necessary to contact financial advisors or brokers directly to get the necessary information. But the fact is that our filers can access this information. In many cases, they prefer not to, but it's required by the form, and the contents of the form are required under the Ethics in Government Act of 1978 or the Stock Act. So this information has to be collected and has to be reported. And that's true. It can be a time-consuming process, particularly with new entrant reports the first time we're trying to gather this information. Sometimes it does. It takes a couple of weeks, and it's important that we make sure we have a full picture and have advised folks entirely before we have them going on to participate in government matters that pose potential for conflict of interest.
And one more thing on the technical side, OGE does allow the attachment of brokerage statements as long as they contain the required reporting information and also as long as any other personal information has been redacted.
Yeah, and we would caution you strongly about allowing the attachment of financial statements. The potential for release of sensitive information inadvertently when you start attaching multiple pages of statements goes up considerably. It is possible to do so, but you think that's a lot of account numbers, that's a lot of personal identifiable information. There's a lot of a risk associated with doing so. So, there are a lot of reasons not to do it that way, but if necessary, be extraordinarily careful and proceed with caution.
Were there any other questions?
Yes, the next one is the guide you are referencing a book, or is it the new entrant guide on the website with the hyperlinks?
Okay, the guide I'm referencing for this part, it's not really a book, it's an OGE publication, and if you go to our website and click on the 278 tab and go to helpful resources for public financial disclosure, halfway down for reviewers/ethics officials, it's the second entry, Guide to Reporting Selected Financial Instruments, and I'm using that particularly because I just don't have a lot of financial knowledge, and it's one that I found very, very helpful.
And these are the things that don't come up all that frequently, so I find it very helpful because it might have been a while since we've last seen it. We can also add a link to this document to the Max page so that you can find this from the page where you registered for this course. Thank you. Those are excellent questions. Do we have any more questions? Okay, that looks like all the questions for right now. Should we move on to Schedule B?
Yes, and this shouldn't take long because new entrants do not have to complete Schedule B, so we're done with that one.
That was very painless.
Okay, if we could move on now to Schedule C.
Yeah.
We see that our filer has reported a liability in that big private university has a mortgage on a personal residence.
I told you this happened sometimes, Mark.
I was stunned and amazed when you came up with that. What do you think about that, Patrick?
Well, this looks like a technically sufficient asset. And again, this is something that does happen from time to time. We see this with folks coming in from universities. Oftentimes, the universities own a lot of property or have a lot of assets, and they offer this as a benefit of employment. We'd be concerned in the same way we'd be for any other continuing benefit of employment that reaches into federal service, that there's a potential that this is a supplementation of salary. So we just want to make sure that if they're allowed to continue with this arrangement, that that's pursuant to a plan that the university offers to all such employees, and not just those going into federal service.
So in effect, this is just one of his perks from employment, but is not really a personal liability, so would not actually have to be reported here, correct?
It might not have to be reported here, right? Because it's the mortgage on the personal residence, unless required by the Stock Act, of course. But it might also be an agreement or arrangement from outside employment, so we might just want to bump that down a part to part 2.
And this is something we would determine in our back and forth with our potential new employee.
And this is a good opportunity to ask if there are any other benefits that Mr. Nikolic has from the big private university, maybe participation in a tuition remittance program or other kinds of benefits.
Great. Now let's go down and take a look at Part 2, agreements or arrangements. Our filer has specifically stated that he will take a leave of absence from his position. This is not that uncommon,
It's
as
not.
we've discussed before.
No, people coming into government from tenured positions very often take leaves of absence.
And entry number 2 is that he will continue to participate in the 403B. Once again, this is fairly common, but he does go on to state that during the leave of absence, BPU will not make contributions. Now, why is that significant?
Because then we don't have a receivable from BPU during his service. If he could take federal or official action in the government that would affect their ability or willingness to make that contribution, that could pose a conflict under Section 208. So the fact that those aren't going to be ongoing is important. But because he's on a leave of absence, I think we still impute all of BPU's interests to him, because he's still technically an employee of the university. So as an employee, all of their interests are going to be imputed to him. And we're going to have to do some significant work to implement necessary recusals to prevent possible conflicts of interest.
So we would definitely want to enter into a written ethics agreement with Nikolic if he came on board, and specifically state that and spell that out. And OGE, once again, has a ton of guidance with specific language to be used in scenarios like this.
And I always like to make sure I fully understand the terms of the leave of absence agreement, and that there aren't any continuing benefits that are going through that might pose us a problem under 18 U.S.C. Section 209 or otherwise constitute a supplementation of salary.
Great, great. Okay, so let's move on now to Schedule D. Next slide, please. Yep. Okay, let's take a look at Schedule D, Part 1, positions held outside the government. He has listed Big Private University as a senior lecturer from 1989 to the present. Is that a valid entry?
Yeah, that looks pretty good. So you know that's what we would expect to see. That's his current employer.
And it ties in with his reporting on Schedule A
Yes.
for his salary. He also reports scientist for a nuclear tomorrow research organization, and he's a research group member. The next entry is also for public advocacy, and he lists an advisory board member. What sort of questions will we have about this type of entry?
So we have on the technical side, it's kind of an open question about whether or not these are reportable, because we have to report positions where we're officer, director, trustee, general partner, etc. And research group member might be mere membership and might not actually be a reportable position. But we could have concerns here from a conflict of interest perspective. So we want to find out if he intends to continue in these positions. And then we want to make sure to provide him the totality of counseling that we owe folks when they have outside activities. So that would include talking about things like financial conflicts of interest, supplementation of salary, representational issues, gift issues, misuse under Subpart G, appearance concerns, and the like. So if he intends to keep these during his service to the government, we're going to have a counseling exercise that we need to discuss.
Conversely, based on our analysis, we may require him
Resignation.
to resign.
Yeah, if we had a high potential for conflict of interest and we couldn't implement sufficient remedies through recusal, you're exactly right, Mark. We might ask him to resign from those positions in the ethics agreement.
And for our PAS types,
That's typical.
typically, yeah, they have to resign unless they get an exception from the White House. Okay, let's now go on to Schedule D, Part 2, which we didn't have to look at before, but this is where the filer reports compensation in excess of $5,000 paid by one source. And essentially, we're just concerned about the filer here, but we're looking for money that the filer received for personal services provided directly by the filer. And it doesn't say it specifically, but typically we're looking for client lists for attorneys or lobbyists. Once again, there could be a higher potential conflict of interest there, and that's why Congress has determined that this is important. Only new entrants or nominees need to fill this out. Let's take a look at our examples. The first one is Doe Jones and Smith, hometown state. Brief description of duties is legal services. Didn't the filer already report that on Schedule A? Yes, he did. Once again, there are some redundancies built into the system, and even though the filer reported his law firm salary, for which he granted personal services, on Schedule A, he still has to report it on Schedule D, Part 2. The next example is Metro University, client of Doe Jones and Smith, and it's for legal services in connection with university construction. That's a specific client of the law firm in which our filer did personal services provided directly, and the compensation either to the filer or the firm was in excess of $5,000. Now, in our first entry, our filer reports the big private university services as a senior lecturer, which is correct, technically sufficient. But what else might be missing from this, Patrick?
Yeah, so that first entry looks like is consonant with what we saw on Schedule A. But I did note that we had the honoraria reported on Schedule A, and that was compensation in excess of $5,000. So while it might seem redundant to the filer, that also needs to go here.
Absolutely.
And our analysis would be exactly the same as we discussed under Schedule A.
Absolutely.
So we have a bunch of questions for Mr. Nikolic, but that's kind of typical when we do draft new entrant report. We're going to need some more information. We're going to have to think about the remedies that we want to implement and that we must implement in order to keep our new employee out of any difficulty with the ethics laws and regulations. So thank you, Mark, very much for joining us. Is there anything else we need to do with Mr. Nikolic's report except thinking about drafting an ethics agreement?
The one thing I just want to leave everybody with is remember there are resources out there, especially at OGE's website. There's a lot of guidance, especially on complex financial instruments. After that, we have guidance on determining and analyzing conflicts of interest.
Well, do you have a moment that we could open up the phone line for any questions and take any questions that might have come in through the Hangout?
Absolutely.
Excellent. Aisha, we would like to open it up for questions when you have a chance.
Certainly. Once again, just a reminder, if you would like to ask a question, please press *1 from your touch-tone phone, and when prompted, record your first and last name. One moment. From the audio participants at this time.
Excellent, thanks very much. And do we have any questions on the Hangout? And we're not showing any questions on the Hangout either. Well, we'd like to thank you all for joining us, and thank you for your questions throughout the presentation. We'd also like to thank you for your patience. We had a technical difficulty when we tried to present this course a couple of weeks ago. We thank you for your participation and your patience, and are glad that we could get back with you. Also like to thank you, Mark, for joining us on this second Makeup Day. We really appreciate it, and I hope this will serve as a good refresher for the folks who are just entering public financial disclosure season. So I look forward to seeing everyone next time on our fundamental series. So thank you all.
Thank you.